Within 26 hours, it's very possible that the price of Bitcoin experiences a further decline from where it is currently sitting at, which is $67,800, a very important line of support for its formed bear flag. This is a direct consequence, or it would be a direct consequence, from what President Trump stated. We will go through what he said, how it will affect the Strait of Hormuz and geopolitical tensions overall, and in translation, what Bitcoin would do next from my own perspective. Before we end off the video, we will also cover the most important points in the industry, the important news in the industry that you have missed. Some of them, like this one, are absolutely game changing, I promise. It's worth watching the video just to understand what this was. So many people missed it. I'll get to it before this video ends, I promise. In return, if you can destroy the like button, it would honestly mean the world to me. It will help grow the channel, so if you haven't destroyed the like, please do hit the thumbs up and subscribe for daily content. If you're looking for a place to be trading Bitcoin and cryptocurrency, check out our partnered exchange link to Levex to get exposure to Bitcoin and cryptocurrency derivatives and spots, and BTCC is where you will get access to WTI, to commodities and more TradFi products. That is the second link in the description down below to BTCC. First, let's understand what it was that President Trump said. He mentioned, quote unquote, that if Iran doesn't fully open without threats the Strait of Hormuz within 48 hours, now roughly about 26 hours from this exact point in time, the USA will hit and obliterate their various power plants. This is something that we don't want because it increases escalations within the Middle East. Iran replied, stating that they would completely close the Strait of Hormuz if that happened. And again, it would increase geopolitical tensions in the Middle East, which we want to avoid 100%. From purely a market-based angle, because I'm a market analyst and I only go into geopolitics when I really have to, when it has a direct influence on Bitcoin, interest rates, so on. So I'll stick with Strait of Hormuz only. Let's hope that this doesn't happen, right? So Strait of Hormuz, if it gets fully closed, it's partially closed. Some countries have access to it, but it's mostly closed, and a full closure would just make crude oil prices go higher because 20% of crude oil and LNG pass through the Strait of Hormuz. Some countries, like Southeast Asian countries, rely more on the crude oil from the Strait of Hormuz than other countries across the world do. So, particular like China, for example, would face a bigger impact from a full closure of the Strait of Hormuz compared to, let's say, country X, right? If energy prices remain elevated because of this at the $100 for a longer amount of time, then inflation will go up year on year more and more as well. If inflation goes up because energy is a big contributing factor to CPI, then the rates will not be cut. This week we found out that from a percentage probability of getting 4 cuts in 2025, the chance of a rate cut all the way until 2027 October doesn't exist anymore. And we even have a chance of a potential rate hike in 2025, 2026. Can you believe it? Can you believe it? That's unbelievable. So, in a restrictive monetary policy environment that comes from high energy prices, therefore high inflation, I'm sure you're wondering why the gasoline that you're filling your car up with has suddenly skyrocketed, even with government subsidies in some countries now. It's just very expensive to fill. It's because of the Strait of Hormuz. If we see these prices remain elevated from continuous geopolitical conflict escalation, then purely from a market based approach, we won't see monetary policy easing. That will cause risk on assets to not see relief, particularly Bitcoin and altcoins, and it will just be really upsetting for some more months. I know that until 2027 October, we're not getting rate cuts, but if this war ends quicker, then those probability tables will change. The dot plots will change. The expectations will change. But for the short term, I think being an optimist will not pay dividends. I think being a pessimist for the short term will pay more dividends as we're in the bear market, as we have a bear flag in the 4-hourly time frame. If 66.7 is broken to the downside, then I see the mid 50s for Bitcoin. Can we still see a relief rally? Yes, because the line of resistance is diagonal, the price of resistance increases every day. So whereas we would have needed to see a break above 73.7, 73.6 to get 84K, now we're looking at 77, 76 to be broken to see 84K. So the reward has decreased dramatically. So being a bear makes more sense to me again. Even if we see that push to the upside, I ultimately see a decline. So let's please be careful of that line there. If we see more geopolitical conflict this week, then Bitcoin will react, in my opinion, negatively. In the week, though, we got some big events, which, unlike the short term, I think for the long term will be amazing, and it will help pay the efforts that we're giving into this industry when nobody else is giving efforts. Nobody cares about crypto. That's the honest truth. But we care. We're here every day. We're showing up every day, and those efforts will be paid off with some of the news that we've gotten recently. The first one I want to get to is the big one, which I mentioned, which was the CFTC announcing that futures commission merchants can accept Bitcoin and Ethereum as margin collateral. In the surface level, it may be a tough one to understand, but basically, we have institutions like JP Morgan and other big banks and other big guys that trade hundreds of billions of dollars worth of money every single day, even. Right? I mean, every single month. Let's be more conservative. But when you look at the CME, there's hundreds of billions that are traded on the CME every single workday. What the CFTC has just enabled is that now Bitcoin and Ethereum can be used as collateral to open positions. Previously, if a big institution wanted to open a position with Bitcoin, they would need to sell the Bitcoin, get that cash, which is a tough process, and use that cash to then open the position. Today, institutions are incentivized to keep their Bitcoin and even hold Bitcoin because they can just put that as collateral and open positions that they want to. So if they believe that the price of Bitcoin is going to go up, they buy a bunch of Bitcoin from 60K. Then when Bitcoin goes to 100K, they can open up that much amount of more dollars worth of positions because Bitcoin's the underlying collateral has gone up in value. So they can play around with the current financial system more with Bitcoin going up. So they're more incentivized to keep Bitcoin if they like Bitcoin long term, which we know they do anyways. So I see this as huge buying pressure for Bitcoin and Ethereum, again for the long term. It's nothing that will cause Bitcoin to go up tomorrow, but I think it's great for long term. There's a 20% haircut, which the the regulatory bodies and the people processing these transactions take as a haircut because Bitcoin and Ethereum are still considered as more risky assets. But it's a big step. I see billions of dollars being traded through this gimmick, and that number will increase over time as Bitcoin reaches further and further heights. Another big news was the classification of about 90% of cryptocurrencies as non-securities. XRP, officially non-security. Most layer ones, officially non-securities. Ethereum is a digital commodity. BNB, digital commodity. That's what they're calling these layer ones. When tokenization hits big, we're already seeing billions of dollars tokenized, but it will reach trillions according to key figures in Washington, D.C. Those trillions will flow through layer ones, in my opinion, like Ethereum, like BNB, like Solana. If there's transaction happenings on their native on crypto layer ones, their native coins will therefore also see adoption to pay gas fees to contribute to the network. Staking has now been officially classified as a legal thing. Big institutions will want to partake in staking from layer ones, right? There's an important separation we should make. Staking from layer ones, where the staking only comes from the tokenomic model, that's where it's fine. I see huge inflows into altcoins after this regulation revision and after what the CFTC has done with the futures commission merchants. This is really big stuff. So alongside adding to my Bitcoin stack, I've bought Ethereum, I'm buying Solana, I'm buying BNB, and those are predominantly the coins that I've been accumulating following these announcements. If we can get the Clarity Act bill past two, which according to Centris and the LMS, we're 99% of the way there when it comes to the stablecoin yield dispute, which you may remember, then all the stars will be aligned, apart from liquidity, which will come at some point in the future. But you don't want to be buying, from my experience, when the liquidity comes. You want to be buying before the liquidity comes, when there's extreme fear. And there is. So you're seeing a huge development from the fundamental scene when it comes to regulation. You're seeing all the doors get opened, but it's just that Bitcoin, don't worry, this is the more accurate bear flag. You're just seeing things stumble due to external reasons, due to liquidity reasons, which are nothing that Bitcoin or cryptos can control. So it's out of their control. I see the long term as positive. I see these prices for buying. Can Bitcoin come lower? It can. It probably will. Will Ethereum, BNB, Solana come lower? They probably will. But if you have a long-term mindset for the next 2, 3, 4 years, then I think it's a good time to be accumulating. So with that said, thank you so much for watching. Take care, and I'll see you all very soon on tomorrow's Moonshow live stream and tomorrow's video. Bye bye, guys.